You just lost a whole lot of money in March and April. It's time to start making some of that back. And with the reduced inventory, you can definitely set those rates a little bit higher than normal.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odum and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odum. Doing the intro here alone, our episode today is of a meetup that we had recently. The subject matter is vacation rentals, and we are constantly having listeners inquire about us doing more vacation rental properties. So for you guys, this is the episode you need to be listening to. Appreciate Tom Mathers. He went onto our website and gave us a recommendation and also made a comment. It says, I recommend this podcast, that you give this podcast a listen. I find the information current and understandable. And that's Tom Mathers from Fort Myers. Tom, really appreciate the time that you took to give us a review. Go on to our site and leave some nice comments. We appreciate that. Leaving the comments is not just about being nice to us. It does help us with guests and guests that don't know our show, that are considering whether it's worth the time to invest coming in and speaking with us. They look at the reviews and it gives them a warm and fuzzy that their time is not going to be wasted coming and talking to us. So if you've not done so, we would appreciate it if you go to the iTunes store or the Google Play Store and leave us a review and give us a few quick comments. It definitely helps us with our recruiting of guests to come on the show. So again, Tom, we appreciate the time that you took to go ahead and do that. Also, before we get into the episode, I wanted to say that we do have opportunities that pop up from time to time that we cannot handle on our own. If you're interested in participating with us on a project by investing, give us a call at 813-514-1070. These opportunities, as a matter of fact, like right now, I've got a single family home deal that was presented to me off market, and those pop up. Usually we can handle those deals on our own, but more likely the type of thing that we don't have all of the equity to be able to take down are single tenant retail deals, medical office. It could be small industrial properties. So if you're sitting on some IRA money or other, it doesn't really have to be IRA money, but you're looking for an investment opportunity and you don't want to handle the management, we'll do all the management for the projects that we work on. But if you're interested in participating in any of those types of deals, call us and let us know. We can get you on the radar screen. So when something pops up, we can ask you and see if you're in a position to be able to participate with us. So again, give me a ring here, Eric Odum at 813-514-1070. In the meantime, let's go ahead and roll into our episode.
J-Ryan Steward and Jarrod Higginbotham of Teal Hosting, who are our guest speakers tonight, providing some educational content. Obviously, a lot of the people so far have mentioned that they're interested or already, investing in short-term rentals and VRBO properties and things like that. So we have J-Ryan and Jarrod on tonight to really go through kind of, some of the challenges that you might be facing or that we're facing in this market, and obviously how they can help you potentially with their business. So J-Ryan, Jarrod, I'm going to turn it over to you and let you share your information for the next half hour, 45 minutes.
All right, Scott, thanks a lot. I'm J-Ryan. We're the co-founders of Teal Hosting. We're the short-term rental experts here in the Tampa Bay area, right, mostly on the Tampa side, but we do have a little bit of presence on the other side of the water in St. Pete and Clearwater. We're currently going to be building that out this year a little bit more. So as far as short-term rental, this market is pretty exciting right now to be in and to have made it sort of through the worst of the very first wave of what happened with the with the hardships that are happening. So basically the bottom line is what we do is we're full scale management. We take your investment property and we give you a budget. We turn that investment property into a successful short-term rental. We leverage platforms, everything from Airbnb, that has been mentioned, VRBO, HomeAway, FlipKey, TripAdvisor, all the platforms that fall underneath those umbrellas. So reaching dozens of platforms certainly helps as far as booking percentage. We're doing pretty well this year. We'll get into that a little bit later. Jarrod will go over some of those numbers that we're looking at this year to give you an idea of what the pulse of the market is like right now, because short-term rental is not only a new market segment relatively over the last 10 years, but now the landscape is changing and we're finding out we were right about some things and wrong about some others. So as far as our company goes, we manage about 60 rentals here in Tampa Bay. We were a little over 60 before everything started here, and we're getting back to close to 60 now. So we took some hits, but we made it. And as far as management goes, you're going to find out very quickly the difference between a company that will be a co-host for you, where they may charge you 10% or something like that, and maybe answer some guest messages. Most of the work is still going to fall to you. We're going to go over some briefly. I mean, this won't really be as much of a highlight of our services and what we can do for you, as much as it's going to be about the short-term rental market. Of course, if anybody has questions after we're all sort of said and done, we're easily reachable. We're going to make sure our information's available for more specific questions about that. But I'll kind of let Jarrod give you an idea of what we're all about.
Yeah, sure. So essentially, we got a few topics that we're gonna cover here. Specifically, like Jay said, we're gonna talk about the market and the shape of it. Post COVID-19. I personally think just a broad overview. I think the market's going to do some really, really good things for us. My job here in this company is as a CEO and sort of like the CFO. I spend most of my day analyzing trends, looking at market reports, evaluating different things, not just for the Tampa Bay market, but the state of Florida as a whole. It's really my whole focus right now. But we did a few things right when we started this company. We created a sustainable business model, and so what we wanted to do was highlight that, because that seems like to me that's the everyone who lost really big during the initial COVID-19 wave, it was because their business model was not perfect. They didn't have a pandemic plan in place. They didn't really know what to do when things got tough. And so a lot of people became over leveraged really quick when no one was booking their places anymore. So business models in short-term rentals, there's a few different ones. I'd like to highlight the arbitrage model specifically, because we have a lot of people in urban core cities like ours, like here in Tampa. This is our backyard, so I can speak to this one more specifically. But there's a lot of different companies that were hedge fund backed by venture capital money, and they kind of subscribe to what I call the Uber model, whereas you take other people's money and you perform or you operate a short-term rental business, and none of it's your own money. But what happens when a pandemic or something, like a major, let's say a Category 5 hurricane comes and just wipes out entire swaths of a city or a region? Well, if you're not using a proper business model, you're probably going to be really exposed. And so some of the things that we saw extremely large companies that operate on that arbitrage model. Some of them were a specific person who used their savings and bought up a bunch of leases in these buildings, these apartment buildings, or maybe they rented out single family homes from property management companies or individual owners. But what they did was, in that arbitrage model, is they overexposed themselves by picking up properties and leases and furnishing them, spending around $10,000 to $13,000 a piece on each one of these units, and they accumulated a ton of units really, really fast. And when they did that, they they basically left themselves wide open because they had no reserves. They had no money left over, to operate in a downtime. So if nobody's coming to stay in your place and you don't have the money to pay these leases for these apartments, you're kind of high and dry here. There's no out built into it. Now, some of these large companies, they did build themselves, some exit strategies in their individual leases, but a very large portion of them, they literally just went bankrupt when this happened. What I specifically saw was companies like Stay Alfred, for example. They were huge players in the arbitrage game. And what they did was they kind of operated as if it was a corporate housing company and a leisure travel company, one and the same. And they did not have just enough money to kind of float these leases every month for 2 or 3 months. Panic ensued. Guests didn't want to travel. They didn't think it was safe to come to Florida. So, when those guests stop booking, you're really setting yourself up for failure if you don't have reserves. So when we talk about a sustainable business model, specifically, I'm talking about people that chose to go the rental arbitrage route. They did not have those reserves. And because of that, just in Tampa alone, I'm seeing about 300 to 500 short-term rentals just come right off the market. And that's a really good thing for us that remain because we had a sustainable business model. Now, our company specifically, we operate on a commission share model, meaning that we don't sign leases for these properties. We don't make the lion's share of the money. We do it for a commission, just like a long-term property management company might do. They just do a commission split sort of model here. So if you're operating currently in an arbitrage model, make sure that you have your exit strategy, or build your model in a way that it makes sense. If you're going to do arbitrage, that's a very viable strategy, but have your 6 months of reserves, right?
You can't get too excited about the money you're bringing in and assume that money's always going to be coming in, because what happened was, especially the small time folks who got a little too big for their britches, is what they see all this money coming in. They're thinking, well, I'm making twice what the rent is, so I can afford twice as many apartments. And they just signing leases. Well, now they're left holding this big empty bag. And now they're going to use all the money they ever made off of that, getting out of these leases and paying penalties and fees. So you have to, when he talks about sustainability of your business model, what happens if that money stops rolling in today? How long can you survive before you got to change everything up?
Yeah. So we got 2 different business models kind of in this business that are the big ones. I mean, J-Ryan mentioned co-host earlier. I wouldn't really call that quite a business model. If you're just a co-host for hire, that's kind of like a 1099 contractor position or something like that. But the 2 models that we want to talk about is the commission model, which is like a rev share with the owner and then the management company, and then the arbitrage, which is in my opinion, the biggest mess up that people have made over the last couple of years. Nothing that's like labeled a get rich program ever really seems to fizzle out in the long run, and that's kind of what we're seeing here. This is my first Nostradamus moment I've ever had in my life, but at the end of 2019, I provided all of my homeowners with a very comprehensive report of the Tampa Bay market. And what we did for the last year, and then what I thought was going to happen for the next year. And I kind of predicted it. I did say that we would see some of these larger arbitrage model companies disappear. I had no idea it would be literally every single one of them. So that was kind of good for us. Less competition means, higher nightly rates. Market saturation is decreased. It really opens up the doors and the opportunity for a lot of other people that are maybe doing, one of these at a time or 2 or 3 of these at a time that they own outright. The sustainable models, I would definitely lean more towards the commission route. We're also going to cover the danger of overextension in the business. So J-Ryan kind of hit on it just a second ago, where if you think, the money's coming in, it's great, in March, which is, spring break. It's our peak season down here in Florida. Money in March is really, really good, but that March money doesn't happen for the other 11 months of the year.
I did have a quick question for you guys. That if you don't mind, Eric actually posed it. Do you guys help with the marketing when you're managing a property?
Yeah, sure.
Go ahead and take that.
Yeah, so marketing is really our niche here. We have, right at 60 rentals here in the Tampa Bay area. And our model specifically, we don't allow anyone else to market these properties. We kind of wanted to build a brand. And, the proof is kind of in the pudding here. When we look at the numbers for our rentals versus other rentals in the immediate area, staging, design, marketing, all that, it really, really matters. You wouldn't see, cell phone camera photos if you went to go visit a Hilton, right? That's not what they're going to load up on their website. So the marketing is definitely super important, and we handle all of that on our own. Honestly, I just don't trust our owners to be very successful at it, especially if they don't have really any experience. It might save you a couple dollars, so you think, but it actually doesn't save you any money. It's happened so many times, especially when we first started this business, where homeowners might have said, I think I want to save the money, and I'd rather, furnish the place myself. But what that actually does is it kind of handcuffs you in the long run, because all of the things that you bought, I might not be able to replace them, right? Like if you're going to go to an estate sale and just buy up a big lot of furniture and go furnish your short-term rentals with it, when those things break, because they will, because guests will tear up your stuff, I'm going to have to go out there and replace it. And I'm probably not going to be able to find a solid wood bed built in the 30s, to replace it. So I would recommend let the professionals who either have degrees or specialized interest or things like that be the ones that are in charge of marketing or staging and designing your place. And then us as a company, we definitely are the exclusive folks to market it. Does that answer your question there? Yeah. Okay.
I think that something that Jarrod sort of focused on that people may not understand right off on its face. Our approach to marketing, it may not be what you think. It's not about reaching out to certain communities. It's not about where you advertise or if you advertise at all. It's about the product you present. When it comes to marketing for short-term rentals, your marketing is your product. The way you present it is your marketing. So these people are going to go to these websites when they need a vacation rental. That's where they're going. So that's the place where you have to make that impression. So when he talks about the design and the planning and all the stuff that goes into the appearance of it, the photography, the fact that we offer virtual tours and things like that, that is all part of our what we call our marketing. And when I talked earlier about our reach, that's the main thing that we're talking about is our marketing reach. How many households we're going to be able to touch, because what we're doing is we're presenting a product that's going to generate click traffic. We get more views, we get more bookings because of that, and we have a quality product and we deliver on that when they arrive at the house. So the big thing about marketing in the short-term rental industry, you may think it's about buying up Facebook ads and doing that, which can help, and we do that sometimes, but that's not the focus of the type of marketing in this industry. It's not the same as you having a product like a widget to sell, and you need to reach those people. The people in this business, in this industry, they're coming to us. So while there is a space for us to reach out to them, what we really focus on as a company, which has shown to be successful for our clients, where we make 25 to 30% often more than they would on their own without management. And that's what part of the reason is, because we're going to present it in a certain way.
Do you think that's one of the common mistakes that somebody who's newer to this or trying to do it on their own is in some of their marketing and really getting there? Is that where they're losing some of their dollars and just not really presenting the property in a good professional and I guess idealistic way that someone looks at and says, yeah, I want to stay there? Is that one of the biggest mistakes, I guess? Like I said, somebody trying to do it on their own and not using someone like yourselves to do that?
Well, I personally think that you probably need to hand off or defer to the experts in any given industry. I do a lot of things in this company. Going to be able to take a product that I didn't design or our company didn't design and reach as many folks as we do with someone else's design. Now, some folks are just really, really good at marketing and design. And if that's the case, then by all means, sure, we'll take that. But what we've done is we've created so many different short-term rentals that we really know what works. And so for us, we're leaning on experience. We're not here, just advertising that we do this with no proof that it works. I can take my portfolio and compare it to other rentals in the same exact market and show you that ours make more money. And not everything is just a design decision. Some decisions get made, based on how many people you can sleep in a rental, right? There's all kinds of different little tips and tricks that we've learned over the years, and we've practiced this so many times. It's all about repetition that, we could spin one of these rentals up in a very short period of time. And when it reaches the market, it's actually operating already at its peak. Some people, they may be hesitant about this, or it may be their first time getting into it. And so they don't pull the trigger and go all the way in. They just want to dip their toe in a little bit. We hear it all the time. We get owners that maybe not, maybe they don't want to put all the, the outdoor patio furniture and the fire pit and things like that. They don't want to put that out, up front. They want to see how it goes for a little bit maybe, and then reinvest later. I'll tell you right now, they never reinvest later. That's once it gets up and going, they just kind of forget about it. So, if this is your business model and you want to get into it, then by all means do it. But definitely defer to the experts or people that have done this over and over and over again. Our brand specifically, we focused. It's all over our website. We wanted to be authentic. We wanted it to be something that people got excited to stay in. I'll be honest, 4 years ago, I kind of hit on to something. I was like, we're not marketing these homes to just men only, right? We're essentially, these families that book these homes to come on vacation, they're looking to be inspired by something, right? So generally what happens, and I've kind of got the numbers to prove it and back it up, is that most people are gonna they want to have that Pinterest effect is what I call it. But when you go online and you see these beautiful places or these picturesque scenes that they put all over Pinterest, that's what's going to inspire people. So it's all about creating little moments, right, in your listing with your photography, things like that, where people can look at it and they automatically know, what, I'm going to be able to come here and I'm going to be able to make memories here. I'm going to have a great time. We highlight the positive attributes of a home rather than the negative ones. Nobody wants to see a window unit AC. So what? Maybe I won't photograph that. Maybe I'll photograph, a nice little vignette that I created in the corner with a nice chair, a lamp, and a side table. Create something like that.
Here's one that we've been giving this tip out for 3 years now. You don't have to take a photograph of your toilet. Everyone knows you have a toilet, and every amateur host is I know people in this room are going to go to their listing and go, oh, no, I got the toilet in there. Don't take a picture of your toilet. Just leave it out. There's no marketing value in that.
Yeah, it's the little things. It's tips and tricks, right?
You probably want to let people know if you don't have a toilet would be just the fair warning, right? Not showing when you do have one.
You would have to. Yeah. So to circle back, as long as nobody has any more specific questions about marketing, I'll send a link out to one of the listings here in a bit when Jarrod gets rolling again. I did want to circle back to the kind of the flow of where we were going. When we talked about overextension, the reason I bring that up as a bullet point in meetings like this is that real estate professionals in particular can be very susceptible to this overextension in business and especially in real estate. You get your first flip done and it goes great. and you get that big chunk of money and you think, all right, I could go do this other project, but if I did 2 projects and they both went well, man, I'm going to be just killing it. Well, what happens is it doesn't always go well. And then sometimes COVID-19 hits. So we've got plenty of friends in the real estate industry here around town that have overextended themselves, and they're in hot water right now with an extra mortgage and leveraged money that they had not planned on, all this stoppage and stuff. So just be very careful as you get excited about short-term rental, and when you're doing very well, don't necessarily assume that money's always going to be coming in. Seasonality is a thing. We have got our seasonality calendar, and right now that's changing a little bit. So we have to change with it. Just be very careful not to get infatuated with a couple of big paychecks. Do your 12 months and say, what was the 12-month calendar like? Really take a long view of it and not just jump into a project after project. Make sure you're, again, sustainable.
Eric was asking again, and somebody actually chimed into this too. What are the things about vacation rentals that are changing that keep you up at night? And Katrina just mentioned, her biggest issues are the ground services, getting the cleaning, getting the repair, and maintenance services is what I think that she is, maybe sees the most issue with. So if that's something you want to address now or move on kind of with your presentation, but that's what's popped up so far.
I hit on that sustainable business model. We knew from day one that if you're going to create a business, you have to provide value, and that's really what we hit on. I'm sure everyone that's probably dialed in here has called a plumber for an emergency at either their house, their short-term rental, anything like that, right? Guests, they're not cautious. They don't care really about your property. They paid you money, and that shows that they care. So they're going to stop your toilets. They're going to do those things, right? And if you don't prepare yourself for that $250 service call from a plumber to go, run a snake through your sewer line, to get that shoe out, I guess, you're going to overextend yourself. So when I say we wanted to provide value, our business specifically, I had a background in construction and renovations and things like that. So we knew very early on if we were going to do this, we had to provide that value. And so in order to provide that value, we in-housed our housekeeping and our maintenance staff to provide that value, sort of crowdsourcing a plumber, if you will. So when you have a leaky toilet or a clogged toilet, you're not going to have to call that emergency plumber and get charged $250. You're going to call, actually your guests will call us and let us know that the toilet doesn't work, and we're going to send our own maintenance team over there. And that $250 service call is probably $65 now. And so that's the kind of value in the model. But finding people to do it, I think a lot of people that are in this conference here are probably folks that might do it themselves for a little while. At least that's the kind of the ring to it I'm getting.
Well, it's about your network of other professionals that you're around. When you hire management, you're also hiring our network of technicians and pros. So one of the big things we always bring up is HVAC, because everybody in Florida has had an HVAC issue, and it's usually not exactly same day service. Sometimes they'll tell you, well, it'll be, this is going to be between Tuesday, 4:00 and Thursday. We'll see, and you don't know when that's going to happen. And if it's a guest's house, that you're relying on this HVAC, you can't let them stay if there's no HVAC. You have to lose that reservation. Well, one of the biggest things we have is a network of pros, and our HVAC guy is usually there within the hour, or at least within that same day. And it's very vanishingly rare that he would not be able to fix the total problem, even on a Sunday. So that's the kind of thing that you will be able to handle yourself until the day it has an HVAC problem, and then you're losing sometimes a big reservation. It doesn't matter if it's a 2-day reservation or if it's 40 days. That person gets there and the HVAC doesn't work, they're leaving and they don't have to come back. So those are the kind of things that you have to think about in that long-term thinking that we talk about. And that sustainable business is what happens when an emergency happens at whatever hour. how are you going to handle that, and can you handle that? So that's a good question. That's one of the reasons people reach out to us often, is they manage their own rentals, and then something happens, and that's once they encounter that, they're now looking for help, and they understand the value of hiring out.
I got 2 questions here. One from Katrina. Yeah, at this current moment, we're only operating in the Tampa Bay area. We are expanding across Florida. That is one of our goals for this entire year. But the next question was Stephen. He's looking for characteristics that make some properties better investments than others for short-term rentals. Now, that's a lot of trade secrets. I could definitely give you some tips and tricks here. We always try and find hidden value. I work with a lot of investors that are maybe not from Tampa at all. And they're looking for properties in Tampa that that could be short-term rentals, and we would manage for them. I mean, these are some really simple tricks. You really just have to look at it using common sense here. Here in Tampa, for instance, we have tons of 1920s craftsman bungalows. Well, some interesting things about 1920 homes is that a lot of them don't have closets, right? A lot of these bedrooms in these homes, when this house was first built in the 20s, they used wardrobes. They had 4 outfits, right? So there aren't big, large closets, right? So if you're going out and looking for properties, right, we all know that you cannot call a bedroom and get a bank loan on it if it doesn't have a closet in it. So what I would be doing is looking for added value. Look for terms like bonus room or office, right? Things that will actually keep that. Let's say we're comparing a 2-bedroom home to a 3-bedroom home. A 2-bedroom home with an office is going to be less expensive than a 3-bedroom home. That's just how it is. They cannot market it as a bedroom. It's going to lose value. It will not appraise the same. So, that's just one tip that you can find. So find some characteristics about that that would work. The second part of that question was, what about association/neighbor objections? You know what? I have had a few instances where we've had some impolite neighbors, but those neighbors, if you really think about it, that's not your enemy. Those people should be recruited to be part of your team, right? A very vested neighbor is going to be probably one of your biggest assets. Everybody has, a niece or a nephew or a son or a daughter that either wants to make a few bucks cutting grass or maybe cleaning a house or doing something like that. If you're thinking about something or thinking about picking up a property, or maybe it's a property that you already have, go talk to those neighbors before you go and do this, right? Let them know what you're planning. You'll be able to tell immediately if they object to it, but this is your chance to get ahead of the guest issues that are going to come. I mean, currently, after this pandemic, people were cooped up for a really, really long time, and they wanted to go on vacation in the spring and they just couldn't. So they waited until the summer, and now, Airbnb specifically is having a really tough time cracking down on party houses. That's the term that they use, right? They've implemented restrictions that prevent guests of certain demographics, whether it be location, age of the renter, number of nights that they're trying to stay. They've imposed restrictions on that. In order to try and quell that, but you are going to have people that just disrespect your property, disrespect your neighbors, and you really got to get ahead of that. So recruit them, do whatever you can to reach out to those neighbors. Let them know, like, hey, I understand, in Tampa, the average home in some of these places is like a 2 or 3 bedroom, but if you want in-laws to come visit you in Tampa or go stay in your property, I know that there's no hotels anywhere in this residential neighborhood. I bet you'd probably want your mother or your sister or whoever to come stay, in a house that's right next door to you. And when they do, I'm going to give you a discount that I would not give anyone else. That's how you get that buy-in from them.
You also, when it comes to getting the neighbors to be on your team, what a neighbor wants is to know that if they do have a problem, there will be someone available to fix it. if they know they can contact you and they reach out to you and you do fix a problem, you've now earned their trust. You're not going to get that opportunity if they don't have your phone number, because the only phone number they're going to have is either the police or the city. And those are just problems you don't want to have, So once you have that relationship, like he said, you're going to offer them a benefit where, okay, yeah, that's true. I could stay here. My family could stay. And then number two, they have that confidence that at the very least they have someone to reach out to, and they won't feel helpless in the moment when they have a problem with people parking on their lawn like a West Virginia family reunion. You got to handle that real quick.
I like to point out he is from West Virginia. So
I am absolutely not from West Virginia.
Specifically, we didn't hit on associations. I think you're probably talking about condo associations or homeowners associations. I mean, obviously, Florida we're ready for vacation rentals here in Florida. We're not in a new industry. Vacation rentals have been a thing in Florida for longer than I've been alive. So that's not exactly new. And so you do have homeowners associations or condo associations that outright prohibit them. And if they prohibit them, then there's not really a whole lot you can do other than petition the board, ask for an opportunity to speak, and try and get some of those restrictions lifted. But most places are kind of dead set on that. I have had success working with some of our investors who really wanted to get a certain house in a certain location because it would be perfect. I've been able to have that conversation on behalf of my potential homeowner or my investor. I'll reach out as a management company and let them know, like, hey, we're pros. This is what we do. These are the things that we implement to make sure none of this stuff happens. And I've had some success that way. I've been able to, close deals on places and use them as short-term rentals because I was the one that reached out to that the association and made that connection and, gave them that warm and fuzzy that, hey, things are going to be pretty good when we take over. And everyone loves money. So another strategy that I've used in the past was sort of a rev share model. A lot of these associations, they've got bylaws that have been written that prohibit this stuff. Not just because, they don't want short-term renters there, but because there's no value in it for them, right? You have to make it valuable for that association and the other owners that live there. So, it has worked in the past where we offer some type of concessions, whether it be $100 application fee every single time we take a guest in that place. Those things, they add up quickly. If the homeowner association dues are, let's say $100 a month from their normal owners, right? What happens if I turn one of those units into a short-term rental and I give them $100 application fee? On average, we take about 6 to 10 guests per month in every single one of these. That's $600 to $1,000 a month that association can now take. That's literally 5 to 9 times what they were going to get for, a standard long-term rental. And associations, especially in Florida, I've seen some wildly mismanaged associations that do not have the funds to cover needed repairs for balconies or assessments and things like that. So if those owners know that their yearly assessments will go down if they allow short-term rentals to operate because they're going to get another revenue stream, that's a huge win for them. So I've turned a lot of heads, and I've really had some good success doing it that way. And it doesn't have to be $100. It could be other added services. Maybe, we'll provide lawn care for the building or something like that. You can do all kinds of different things if you talk to the right people. Moving on, I was going to cover short-term rental rates this year and the effect on seasonality. This is something that I spend a ton of my time researching. Now, COVID-19, I mentioned it earlier, it really put out of business a lot of the arbitrage model, short-term rental hosts. So if you can imagine a city that's got 3,000 short-term rentals and 300 to 500 of them just disappear overnight, that's going to be really, really positive for the rates for the market. This market has to correct somehow, right? If 300 to 500 units are gone, that means that more guests are going to be fighting over your short-term rental than they were before, right? So increase your nightly rates. It does have an effect. In some markets, it's different than others. I know some markets have regulation burdens that keep them from operating as short-term rentals. I mean, you could talk about New York City specifically. They're basically anti-short-term rental. But here in Florida, it's a lot different. We have certain protections at the state level that allow us to operate short-term rentals. But the seasonality specifically, let's talk about the way our guests are thinking, right? So this pandemic happened, at the start of the year. We kind of knew it was coming, but no one was quite ready for Airbnb to just clear your calendars and refund everybody your money. That was an extreme burden. Airbnb is still in recovery mode from that. VRBO handled things a little bit differently. They let the hosts really do most of that work, but those types of things, they really do affect people. So you had a lot of people that had zero guests traveling March 14th when the WHO announced that this was going to be upgraded to a global pandemic. So at that point in time, you had some really important decisions to make, right? A lot of people, they panicked. They lowered their rates, to absolutely nothing, right? And then they got people that came in right after that and just destroyed their homes. I mean, I can't lie and say that, we've never had bad guests that have destroyed homes. Nothing ever like what you'd see in the movies, but people are just inconsiderate and they didn't really take care of the place. But, the overwhelming strategy here for us that we did was we manipulated our portfolio as a whole. We dropped our rates 60% for the next 30 days, and we took some long-term bookings, right? That was to kind of make up for anything that was lost. We still did really well. Our occupancy rates were still really high. And then right after the WHO stepped up and said that it was a global pandemic, then we had the governor of Florida shut down short-term rentals and left hotels wide open. They could still operate, but short-term rentals couldn't unless they had a 30-day booking, some other restrictions, right? But so we had to manipulate our prices. And what we did was we kind of did this on purpose. We floored the market. We dropped it 60%. And what it did was it made a lot of people quit. So we did contribute to the 300 to 500 listings that dropped. Not all of them were short-term rental arbitrage type people, but we did drop those rates pretty drastically. We wanted to kind of use this opportunity to shock the market and weed out the folks that were not serious about this business. Because here in Tampa specifically, I call them like, IKEA apartments. You could go into a short-term rental. I'm sure a lot of people have been to them before, where you step in the front door and literally everything in it was bought at IKEA or right off of Amazon. There's no character. It cost them $6,000 to furnish an entire place. And the place just didn't really have a lot of value other than a place to stay, right? So we were able to get those folks to drop those listings and get out of the market, because they either couldn't get 30-day stays, and we ended up really affecting the correction that was about to happen, right? So for the first 30 days we dropped it 60%. The next 30 days we dropped it not an additional, but we dropped it about 40% from wholesale, and then we kept that going continuously until we got to about 50% in addition, right? Because we all knew there was going to be a hangover or a travel uptick once people got out of their houses after they got out of that lockdown, right? So we wanted to make sure that we were ready for that, right? So we increased our prices for those bookings into the future, right? Let's talk about June. June specifically, I increased my nightly rates for my entire portfolio for about we were averaging about 20 to 25% higher than we were the previous year. So prices have changed drastically. If I'm talking in a single month, I can get 20 to 25% more revenue than I did the same time last year with no pandemic. That's some real change that's happening in this market. And because listings weren't available, hotels, some of them even shut their doors, didn't even open during this pandemic. They laid off their hotel staff. So you're providing something that is desperately needed. Short-term rentals provided an opportunity for maybe people to quarantine inside of, especially in an urban market like ours. It was really, really beneficial for us, right? So I do see that nightly rates are going to be affected for the rest of the year. It will not operate solely on, last year's seasonality calendar. Right now, we're actually tied more into the 24-hour news cycle. So, you see reports on all the news outlets that Florida's COVID-19 numbers are skyrocketing and, the sky's falling in Florida, right? But, as soon as those headlines come out, I start seeing cancellations, right? And now that we're on the other side of COVID-19, I've got two responsibilities. I've got to look out for my homeowner who needs to make sure that they can pay their mortgage payments on these houses. And I also have to kind of treat the guests fairly, right? And I have to, sustain a business with no revenue coming in. It makes things kind of hard. So in an urban market like this, I don't necessarily recommend flexible cancellation policies. I definitely think that you should look out for your bottom line. COVID-19 is not something new at this point, and anyone planning to travel, they should do so at their own risk. That's what property insurance or travel insurance is for. We're a management company. You guys that own and ladies that own short-term rentals, you're not the insurance company. So, I could see, letting people cancel for full refunds in March when this became, a global pandemic out of nowhere, and then, adjust. It's time to get things back to normal. It's up to us to kind of set the tone for what is normal now, right? We're not able to just close our businesses down, indefinitely and just refund everyone. People still have bills to pay, and people still need to travel. And when you do that, there are consequences. So, we're not the insurance company. This is our job is to manage these properties and make them profitable. So, definitely think about that when you're looking at your yield management strategy for the rest of the year. But test it out. Definitely try and make your rates as high as possible. Some figures that I look at are the booking curve, right? This is it's kind of a term that's used in a lot of hotels, but also a lot of short-term rental owners and management companies. They look at booking curve. In a healthy market, you can, let's take this same time last year. People normally book in the Tampa Bay area about 30 days out before they're actually going to head there, right? Well, what we're seeing now is people are booking about 7 days in advance, right? So, a lot of people can look at their calendar and they will not have that warm and fuzzy feeling because there's no green on it. These dates aren't booked yet, and they start to get nervous and they start lowering their prices. But what you have to understand is that your place is not worth less because other folks are not wanting to travel, right? Your place has always been worth probably more than you had it listed for previously. So keep those rates high. Don't be afraid to, increase your nightly rates by, 20%, in the shoulder season from the year before. Those are really good tips to keep from hemorrhaging money all year long. You just lost a whole lot of money in March and April. It's time to start making some of that back. And with the reduced inventory, you can definitely set those rates a little bit higher than normally and test it out. Look for people to start booking about 7 days out. So don't panic and rush to lower your prices for the next 2 months just because your whole calendar is not filled yet. People just aren't traveling like that, like they used to. So think about it a little bit differently. My seasonality calendar, I can basically throw that thing out the window at this point. There's not really a whole lot of consumer confidence in travel right now. So make what you can. When you get to 7 days out, add a last minute discount to try and get it booked. But about 7 days out is when the majority of people are starting to look for rentals, at least in our area right now. So seasonality, I think we'll probably reboot and go back to, a more traditional seasonality calendar. Our seasonality calendar is made up of events and personal travel times of the year. Like, for instance, when your kids go to school in August, vacationers kind of stop coming, right? So August is a slow time of the year down here in South Florida. But now it's going to be different because people are going to be homeschooling their kids. They'll be, doing virtual classes and things like that. So this whole thing is going to be different. So don't be afraid to test it out. Increase your prices for the upcoming months by 20, 30, 50%, whatever it takes, right, to recoup some of that revenue. And then you'll be surprised at what's going to happen. I mean, even right now in July, I'm looking at our multi-calendar across all of our listings that we have. Some of them are booked up solid, and others, they don't get that booking until, 7 days out. But that booking that's 7 days out might be a 30-day reservation. I just took one probably 3 hours ago for a home right here in the same neighborhood that I live in. Its calendar was completely empty from today all the way until, January 1st of next year. But don't be afraid, because even right now, because we let it wait until last minute, and we got that 30-day booking at that really high price. I think it was a 30-day booking in a 2-bedroom home for $4,400. Like, that's a really good reservation for this area. Letting it wait until the last date, my calendar for this month, we're still occupied at 93% occupancy for that specific home. And there were no reservations on the calendar. So do not panic. That's probably my greatest advice. Keep your prices high, keep them steady, and let the entire market heal. Right now,
don't forget to bring a towel.
Yeah, so we're our market overall, we're in a healing phase. When you lose 300 to 500 listings, that's a really large chunk, right? So add to that we have a global pandemic where we have to increase our cleaning standards and everything else. Like, to tie it all in, I really just think that people should just calm down a little bit, take a breath, don't panic. If you don't think that you're going to get the money that you need, make your listing, make your short-term rental property, make it valuable enough that somebody absolutely will pay. I mean, I've got $1 million homes that are, gorgeous, and, $600, $700, $800 a night, anything like that. They still get booked even in a pandemic. There are still people out there working, making money. They still need to travel. So I wouldn't quite worry too much in an urban market. Now, I think destinations are a little bit different. There are certain parts of Florida that are, more so destination places rather than, an urban market. When we talk about like Destin, Florida, like that place, I remember going there as a little kid, going on vacation in Destin, and that place is nothing but tourism. So there's really nothing else there. There's no big city that's around there that contributes to, business travelers and things like that. So maybe in a different market, the rebound might be differently, or it might look different than it does in an urban market. I'm speaking specifically to the Tampa Bay area. This is what I'm seeing here, and the future of the market as a whole. It's healing right now. So keep pushing it. Push those nightly rates as high as you possibly can, and don't lower them until the last possible minute, just to get it booked.
You guys wanted to jump in again here. Thanks again for all the information. I think we have a couple minutes left here. I know we had another question come in, and I would encourage anyone else who has a question to get that asked. But yeah, someone was asking whether or not you would do paid consultations. For obviously you're only managing properties here really in the Tampa Bay and area, and maybe some of Florida, but if they're outside of an area where you would manage, are you willing to do some paid consultations to really help somebody optimize their listing, photography tips, et cetera? I think you may be seeing that question there too, but I wanted to make sure you throw that out there.
Yeah, we've done a little bit of that before. And as he said, as long as it's out of our market, it's something we can consider for sure. This particular one sounds pretty interesting, actually.
Yeah, definitely. Hit us up, email us. I think our Our information is going to be in here somewhere. Definitely reach out to us. I'm all about helping people because at the end of the day, what this opportunity has given us is a chance to heal. And I can't stress that enough. This is this climate that we're kind of in right now. We did get beat up over the years by venture capital money that came flooding into these short-term rentals by hedge funds, real estate investment trusts. All these different people poured their money into these arbitrage models. And now that they're all gone, it leaves us so much opportunity to get things back on track. I mean, I got the Super Bowl coming to Tampa this year, and with 300 to 500 listings gone, my nightly rates are definitely going to look really nice for the Super Bowl, right? So there's all kinds of different opportunities here. I'll definitely consult with people and give you some tips and tricks and things like that. I mean, it's not really a secret. I know when I started doing Airbnb, with my own properties in Virginia Beach, when I was stationed up there, we're talking I think 10 years ago at this point, things were a lot different. There weren't examples to pick and pull information from, right? So do your research. I mean, of course I want to make money. So yes, definitely send me some emails, but there are a lot of good hope these things out, and their listings really do stand out, and you can find that stuff. I don't particularly like websites like AirDNA that much because I find that their information, their data is kind of flawed. But it's a good resource to look at and kind of draw from other people's properties. I mean, I think they rank what they think the top 10 listings are in those markets, and you can kind of look at those listings and just take a look and be like, well, why do they make so much money, or why are they overperforming? Is it because of the hospitality that they provide? Maybe, maybe not. Is it something about that particular listing that stands out amongst all the others? Yeah, probably. I'll be honest. It's probably the photography. It's probably the type of photos that they use. I mean, there's all kinds of different things that you can do to really make your listing stand out. And it's super easy. Once you figure it out, it's a formula. It's repeatable. We created a repeatable process that we just, we use over and over and over again every single time we spin up a new listing for a new investor. And it's pretty easy. But yeah, definitely if you want some more tips and tricks that we weren't able to get out during this, feel free to message us. Business has kind of never been better for us. We went through a time that was real slow and very, very scary. And then I'll be honest, about a week and a half ago, 2 weeks ago, it's been nonstop. Phone call after phone call, email after email, meeting after meeting. We're meeting new people who want to get into the market and spin up new listings and reach out to us for management. It's just been a huge outpouring. I think people are finally getting over that little huddle that we did for many months inside of our own homes. I think people are finally going outside and getting some fresh air again, and they're, they may wear a mask and, they may take all these extra precautions, but I think the overall feeling of people is kind of a sigh of relief that, we made it this far. We're going to make it, the rest of the way. So
I think it's a good place to sort of close out our portion of everything here. I want to just say that what we're in the middle of right now is a market saturation reset. And if you're thinking about getting into short-term rental or increasing your presence there, now's definitely the time. That's one of the reasons why we're fielding so many inquiries right now and spinning up new listings every day, every week. So be a part of the market saturation reset. Understand that as a sustainable business model, this is not going to last forever. And the seasonality calendar will probably never be exactly the same, but it will normalize a bit. But if you're able to take advantage of this next year or two during this market saturation reset, we've probably got 2 to 3 years really of really good high profits here, back more similar to what it was 2 or 3 years ago. So that's probably going to be it for us.
Yeah, thanks, guys. Great presentation, great information. Erica, did you want to pipe in and share anything here as we wrap up the meeting?
No, good stuff. I really enjoyed the participation from everybody. I think people being able to ask questions and interact with guests is is really meaningful to these type of chats. And, that's it. Scott, again, appreciate you organizing the setup. I have to mention that we got introduced by Jeremy Clotter. Jeremy's a normal guest at our suites meetings every month. He's the guy we always give a hard time about wearing the tight shirts, but he was the one who made the introduction for J-Ryan and Jarrod. We really appreciate you guys coming on and sharing your wisdom with us, guys.
Hey, thanks for having us.
And J-Ryan and Jarrod, do we have your emails there where people can contact you?
But it's Teal Door Hosting, or staytealdoor.com is their website. So reach out to them, get some good information. Again, as I mentioned, they're open to consulting if you're outside of their management area. I'd really help you maximize the listing. I think just great information, guys. Definitely very topical, and certainly you know your stuff, but especially when it comes to what's going on now. So thanks again for coming on. Thanks, everybody, for joining in. Eric, any parting words?
Appreciate it again, Scott, J-Ryan, Jarrod. Thank you so much for your time.
Thanks, guys. Thanks, everyone.
Bye.
You've just listened to the Invest Florida podcast with Eric Odum and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.